Well, whether it's the stock market or the housing market, this past year has been a roller coaster of emotions and roller coaster of prices. A lot of questions, especially revolving around interest rates, a possible recession, and what comes next.
That's why joining us in today's Leading Essay segment is Jack Hawthorne, CEO of Keller Williams Heritage. Good morning, sir. Thank you so much for making time for us this morning.
Hey, good morning. Thanks for having me.
So, Jack, the latest inflation numbers from the CPI shows inflation effectively slowing 7.1% from a year ago. It begs the question, has inflation peaked, and what obstacles are still in our way?
Sure. So we don't know yet whether or not inflation has peaked. What we know now is we have two solid data points. We have 2 months in a row where it started to go the right direction. Now, what we also saw is that the Fed said, yeah, it's going in the right direction, but we still need more information to know if that's going to be a permanent thing. We see a lot of things like labor moving where they want, but we still see housing, shelter costs, rent still going up pretty dramatically. So they're going to keep evaluating. I'm not sure yet whether or not we've hit a peak, but I know that we're going to keep trending down until something drastic happens.
So when the Feds announced that interest rate hike this week, the markets clearly did not react well. Why was that?
So the markets react poorly to uncertainty. And that's really what happened. We had great news with a good CPI report. We went down, which was wonderful. Now we have a trend, like we said. However, when the Fed came out and said, okay, we're glad we have a trend. However, we don't have enough data to know where we're going to have to stop. And so just to be safe, we're actually going to raise our target interest rate up to 5.1%. What that means is we're moving up quite a bit from where they thought they were going to be before. And so now the market's saying, well, we got great news and you're giving us bad news. We don't know what to think about this. And when people don't know what to think, they freak out and the market goes down.
Now, Jack, there seems to be a lot of pessimism when you hear from economists and market analysts. And they're all saying recession in Q1 of 2023. What does that mean for the market, and is it already priced in?
Sure. So when you look at a recession, you've got two different things. You have a technical recession, and then you have an actual recession being declared. By all accounts, we're already in a recession. And so we just tell people to act accordingly. Now, whether or not the government actually says we are in an actual recession may or may not happen. And so people going forward should just price that in and say, look, we know that interest rates are still going to be going up and down as far as mortgage rates go. We know that the Fed is going to continue to increase interest rates. And so until we start seeing inflation come down dramatically on CPI, we should expect to keep moving in the same direction.
So what would you tell first-time home buyers, people that are just been itching to buy a home? What would you tell them? What would you advise them at this time?
So I put my money where my mouth is on this. I'm still actively buying as well. It really does make sense to buy a home if you're in the market. Now, if you don't need to buy a home, then this may or may not be the right time for you, depending on your financials and what you're looking for. But when you do the math, you're actually going to make far more money on buying a home because you're still going to have appreciation over the next several years. While your mortgage payment may be a little bit less if you wait a couple of years to buy a home, you're going to miss out on all of that equity you would have built by simply letting time do the work for you.
So because I know people are like, oh, but the interest rates, they're too high. I need to wait for them to go down. You're saying, no, go ahead and just buy.
So an interest rate means your payment's going to be a bit higher, and that's absolutely true. But what happens if you take an example, and we can run through all the math at some point, right? If you buy about a $300,000 house today with a 7% interest rate, your payment may be $200 more than that same house in 3 years at a 4.5% interest rate, because that same house is going to be worth about $350,000. And so, yeah, you would have saved $200 a month, but you didn't make $45,000 to $50,000 in equity gains. So it almost always makes sense to go with the cliche statement, don't wait to buy real estate and wait.
And I'm glad we're talking about the parallels between buying and obviously the interest rates, because at the peak of the pandemic, interest rates were below 3%. And so in the last couple of years, how have you specifically seen the local housing market? How have you seen it trending?
Absolutely. So you had a completely made up economy, right? We had a lot of stimulus and a lot of incentive and catalyst from the Fed that just isn't going to be sustained in a normal market. So when interest rates go back to normal levels, which we really are still in normal levels, whenever they do that, you're just going to see less people buying because they have less buying power. You're going to need more for down payment. You're going to need more to cover your monthly expenses with your mortgage. And so we're seeing less buying pressure. What that's done to the market is we've seen prices go down, but we haven't seen valuations go down. A house that was worth 300 is not now worth 250. It's just now selling at 300 instead of 350. So people, when you're going out and you're looking at buying and you're working with a professional and you're saying, okay, because ideally, I don't have a dog in this fight. I tell everyone, you should be working with local professionals. They actually know what the market is doing. You should be asking them, what is this house actually worth? And then you're actually going to make an offer around that point. So we're seeing less buying power, which is driving prices down. But San Antonio is absolutely protecting its equity, which is a great thing to see.
So, Jack, one more thing. What are the kind of hot neighborhoods or trends that you're seeing right now on the market in San Antonio?
Sure. So this is going to be a cop-out answer, and I appreciate that. San Antonio within itself is a hot market. Now, we do see the east side of San Antonio getting a lot of love as we turn more into a suburb of Austin. We're seeing a lot of money and development go out that way. But realistically, the way that I recommend everyone approach this is that if you're thinking about buying in San Antonio, you need to be talking to a local realtor because they're actually in the market every single day. Don't listen to national housing forecasts. Don't look at what, Fox or CNBC or any other news outlet other than, you guys is saying about the market. Talk to a professional because they'll tell you what every neighborhood is actually doing, and that's the information you're going to work off of.
All right, Jack Hawthorne, thank you so much for your time this morning. If anyone missed any of our conversation, we're going to have all the information. Just head to ksat.com.
Keep up to date with all of San Antonio's top news, weather, and so much more by clicking the like and subscribe buttons below. And once again, thanks for watching KSAT.